After having a really incredible year in 2013, Perrigo, the company I like to think of as the king of knockoff private label over-the-counter drugs, has had some rough going in 2014. Stock down 10% year to date. Not used to that. Now, you know I've been a big fan of Perrigo for ages, so I view this stock as a way to play the new frugality of the American consumer post the Great Recession. And also because retailers can't get enough of these store brand private label products since they carry much higher margins than the big brands you're all familiar with. I also like Perrigo's multi-billion-dollar acquisition of Irish drug maker Elan last year. It's a deal that may cut the company's tax rate from 30% down to 17% because Ireland has much lower corporate taxes than we do. That's the inversion. However, there's no denying that Perrigo missed. And missed big when it reported its most recent quarter 3 weeks ago. 20-cent earnings miss off a $1.51 basis on a tiny 1% increase in organic sales. Management also cutting its full-year guidance. Company blamed the weakness on a milder cough and cold season, as well as a decline in retail foot traffic from the cold weather, which we know is true. There's also the fact that Perrigo has been having manufacturing problems with their private label version of Mucinex, which is not helping. Long-term, though, I think this is still an excellent story, one that's made us a lot of money over the years, and I wouldn't be surprised if Perrigo is now ready to rebound. So let's take a closer look with Joe Papa. He's the chairman and CEO of Perrigo. Learn more about his company's prospects. Mr. Papa, welcome back to Mad Money. Thank you so much for coming on, Joe.
Hi, Jim.
All right, let's cut right to it. Here we go. This is a combination of the products that I'm worried about. We had a weak cold and flu, and you had some manufacturing problems with Mucinex. Are those problems behind us? Because if that's the case, then I know the numbers are going to be better next year.
Yeah. Well, Mucinex is a very important product for us. So first of all, number two, I would say on that particular product, we do know how to make the product. We made 100 batches of this product.
Okay.
Having said that, the recent raw material supplies that we got in starting at the end of 2013 did not meet our specifications to ensure that we could deliver the same safety and effectiveness as we always would like. So until we get that raw material supply, we just felt it would be best to stop manufacturing. We have it as one of our most important priorities, though, of our research and development, and we're working really hard. I've got 3 different pathways to get that product to the market.
Okay, that's really important because you know it's very unusual for me to be staring at you and you not blown out the numbers because it just seems like it was kind of a perfect storm, Joe. I mean, you couldn't, obviously, the manufacturing, that's something you said it's a supplier. The cold and flu season, there was nothing you could do. It just wasn't severe. I mean, that happens.
Down 12% just versus last year. And plus the weather that contributed to that.
Now, but let's presume if that does come back, there's a lot of other things that I think do matter. For instance, in the paper today, we see Cialis, erectile dysfunction. Maybe that's going to go over the counter. And I see in your untapped RX to OTC, that's one of them. Will that be something we might be able to think about in, say, 2015?
Yeah, I'm not going to make a comment on 2015, to be clear, but do I believe that this trend, this is what we refer to as a mega trend of products that are prescription today, moving over the counter, is going to continue? The answer is absolutely yes. We see it in everything that the largest proton pump inhibitor, Nexium, just went over the counter on Tuesday. So it's just another example of other products, the Cialis product, many of the products that we expect to move.
How quickly can you go into the Nexium market?
So we expect that Nexium will have a 3-year exclusivity, of which right after that 3-year exclusivity, we will be a fast follower for that particular product.
Now, this is the first time in your most recent presentation you talk a lot about e-commerce efforts yielding a number of benefits. Where are we in terms of actually moving the needle for Perrigo?
We think e-commerce is important. It's important with our existing bricks and mortar stores that we already ship to, but also it's important with Amazon. So we put together a program with e-commerce and social media. The reason we think it's important is we can tell a story about our products having the same active ingredients as the national brand. Once consumers understand that, we significantly drive store brand share as they understand. I get the same active ingredient at a better price point.
But I have to believe that Alex Gorski's Johnson & Johnson, a very well-run company versus the previous, has taken some share back.
They have, but it's been absolutely as expected. They were absent the market for approximately 3 years. They are a great competitor. They've come back into the market. The majority of the products are back. We expected that they would take back about 50% of the share that we picked up during that time frame, and everything we see is still consistent with that expectation.
Okay, the Irish location, you're happy with the change in taxes? Does it really mean anything? It's substantively mean anything for you as a businessman?
Well, I would say the following, Jim. That we felt the Elan acquisition was important to us. Certainly for number one, we get access to a great product in Tysabri, great royalty stream. It's important partner with Biogen. So we felt it was a great opportunity there. But going forward, we now are an Irish domiciled company. Our tax rate was approximately the 30% range. It should drop down to the mid-teens.
So last question. I mean, it's difficult to stay through the gully of not having the Mucinex. Unless you tell us that you think, well, look, the stock's been so punished, and maybe that's how we have to look at it.
Well, notwithstanding the Mucinex, we have to fix the Mucinex.
Yes. Absolutely.
Getting out the store brand Mucinex is a top R&D priority for us. Having said that, though, we still this year will launch over $190 million of new product sales for us during the course of the year. So Mucinex is important, no doubt. We need to bring out a store brand version of it, as well as the rest of the family of Mucinex. Right. But we do have a number of other products we brought into the marketplace that we think is going to help fuel our future growth for the company.
Okay, good, because for those of us who buy this, we know that it's way too expensive unless we buy your version. Anyway, that's Joe Pappa. He's the chairman, president, and CEO of Perrigo. The stock's been beat up, but I've got to tell you, the catalyst that could get it moving again. Don't move. Lightning round is next.